Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you some stocks that can be used for long-term investing. I will also show you how to use this long-term investing strategy in order for you to make some short-term gains. Now, if you guys are new to options trading or you're just trying to use options in order to make some additional income to supplement your already 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you one particular stock that could be perfect for long-term investing. I will show you all the strategies that can be used with this stock in order to make you keep winning. Now, you guys know how we do it. We like to go ahead and get down and dirty with options. So, for today's video, we're going to be showcasing none other than United Health, and that ticker is going to be UNH. Now, before I go ahead and show you these option strategies, let's first go ahead and go into the advanced feature right here in order to open up the chart. I want to set a basis for the rest of this video. Now, we're going to go ahead to the 1 year outlook and see how this stock has been going. So, as you can see down here, if I draw a trend line right here, this stock has pretty much been trading around the $300 level for a long time now, from since May 14th. So it's about 2 months that this stock has done absolutely nothing. Now that is absolutely beautiful, and I will show you why as the video goes along. So let's go ahead and I'm going to show you the option strategy that I would use for make long-term gains. Okay, so here we are back on United Health. I'm going to go down to trade UNH down to the bottom in order for us to open up the option chain. Now, the option chain is all this information down here. Now, before you guys go ahead and use the option chain, and even before I go ahead and highlight these option strategies that's going to make you keep winning, I always have two requirements. Requirement number one, always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second requirement is going to be always make sure to have an exit strategy. That way, if the trade do decide to go against you, then you know how to get out of the trade. That being said, let's go ahead and get down and dirty. So, the first strategy I would use with United Health is to go ahead and just start DCA. DCA simply means dollar cost average. In my humble opinion, I think this stock is at a price where anyone that wants to get into it long term should start picking up shares. If you are trading with a small account and you're not able to buy one share at the current price of $303, well, that's fine. All you can do, you need to set up recurring investments of whatever you can afford. So let's say $20 a week, $50 a month, whatever works for you. So the first thing I would do with United Health is to dollar cost average. Once you're able to pick up a couple shares of United Health, I'm going to tell you right now, you're going to see your returns a year or 5 years from now. That is almost guaranteed. Now, if you are into the options field, now I'm going to go ahead and show you what to do. Now, this first option strategy is going to be good if you have a couple $1,000s in your portfolio. So here's what I'm going to do. I'm going to go ahead to buy. I'm going to go ahead to call. Now, I'm going to go ahead and choose my strike date. The strike date I will be going with is going to be June 17th right here. Sorry, July 17th right here, 2026. Now that's going to give me 370 days. Now, the reason why I'll be going with such a long expiration date is because I want to give myself enough time. So even if I am wrong, I do have enough time in order for this trade to work in my favor. This option strategy is what's going to be known as a LEAPS option. LEAPS is an acronym that stands for Long-Term Equity Anticipation Securities. It is a mouthful, so we usually just refer to it as LEAPS. Now, the buy with the call and my long dated expiration date, I'm going to go ahead and choose my strike price. The strike price I will be going with is going to be the $300 strike price. I just showed you that the $300 strike price has shown that the stock has been trading there for almost 2 months. It has not done anything. So I think that is the best price that I would go ahead and choose right now. Now, the $300 strike price is really at the money. At the money simply means any price that's going to be the closest to the share price. So the $300 is the closest to the share price, below the share price, and the 310 is also at the money because it's the closest to the share price, above the share price. But we will be going with the $300 strike price. Now, with this $300 strike price, I want you guys to remember this right here, 0.6298 or 0.63. This right here is what's known as the delta. I'm going to show you how the delta really works for these long dated options. Now, we're going to go all the way to the end and we're going to go ahead and we're going to select that. So now that we've selected that, we're going to have to pay for this option. Now, I know most of you guys know that on this channel, I usually get involved in mostly income generating option strategies. So stay with me. I'm going to show you how to use this option in order to make consistent income. So because it's buy, we're going to have to pay. The amount we're going to have to pay is going to be $52.95. In the real world, that's going to be equal to $5,295. And that's simply because each option contract does contain 100 shares. So you're going to multiply your $52.95 by 100 shares, and that's going to give you $5,295. Now that you have this leaps option in your portfolio, and you also have an entire year to expiration date, how do you go ahead and win with this strategy? Well, that's simple. All you need to do is wait for this share price right here to appreciate in value. Meaning, anytime this share price goes up, the overall value of your option is going to be going up as well. So here's the exit strategy for United Health. Once this option goes up and you have reached your desired level of gains, whatever you set for your own portfolio goal, be that 45%, 75%, or 98%, once you reach that, then feel free to go ahead and close off this option, lock in your investment gains, and that's it. However, this is going to take a long time because no one knows if the share price is going to be continue to trade at around the $300 level for another 2 or 3 months. But in the interim, there's nothing wrong with using this strategy in order to make some additional income. So here's what we're going to do. Now that we have this leaps option in our portfolio, we're going to go ahead, we're going to go to sell, we're going to go to call. We're going to change our strike date right now, and we're going to be choosing a strike date of around a monthly expiration. Let's go ahead with August 8th, which gives us 27 days to expiration. We're going to be doing monthlies on this. Remember, we now have 12 months before this option expire, which is the leaps option. So now we're going to go ahead and do monthlies. We should be able to get at least 11 months of options unless this gets assigned or you decide to go ahead and close this option strategy. So now we have sell and we have call and we decide to do monthly expiration dates. The next thing we're going to do, we need to go ahead and choose our strike price. The strike price we're going to be choosing is going to be above the current share price, and the current share price is 303. So let's go ahead now. We're going to go ahead and go up, and the strike price I will be going with is going to be the $350 strike price. The $350 strike price gives me a high chance of profitability, which is going to be 87%. Another way to look at your high chance of profitability is going to be a high chance of the trade going in your favor. So there's an 87% chance that you win this trade. Now, because this is a sell call, what we're going to be doing, we're going to be receiving money. This right now is what's known as an income generating option strategy. The amount of money we're going to be receiving right now is going to be $3.75. In the real world, that's going to be $375. Let's go ahead. We're going to select that. Now, this new option strategy, which is known as the sell call, in the real world, we refer to it as a covered call option strategy. Now, as I mentioned before, this can be done on a monthly basis in order for you to keep generating some monthly income. Now, $375 is not that bad, but let me show you where you're able to make the majority of the money. Now, this is the second video in this video series of stocks that could be used for long-term investing. For the stock before this, just go ahead and look for the first video in this series. Now, with the $350 strike price, this is how this trade could work out. Once expiration date comes out around August 8th, if this share price right here stays below the $350 mark, then we're going to get to keep our $375. And then we're also going to have our leaps option that we purchase. That's going to be released back to us because now we're going to be able to do the strategy again for another month. Now, in order for you to do the covered call option strategy on United Health or any stock, two criteria have to be met. You either need to own 100 shares of the stock or you need to be able to control 100 shares of the stock. By buying a LEAPS option, that allows you to control 100 shares of the stock. Now, the other way this trade could go, come expiration date once again of August 8th, if this share price right here happens to surpass the 350 price that we chose, then you're going to be what's known as assigned, meaning you're going to lose your LEAPS option. Now, the word lose sounds like it has some kind of negative connotation. However, it's not bad because you're still going to win. And I'm going to go ahead and show you how you're going to win right now. So remember, when you purchase your LEAPS option, you purchase it at the $300 strike price, but the share price was $303. Now you're going to lose your LEAPS option, but you're going to be losing it at a $350 per share price. The difference between this $350 and the share price when you bought your LEAPS option, the $303, is going to give you a difference of $47. That $47 is going to be your gain on this trade. So it's not just $47. Remember, we are dealing with a leveraged product right here. So you're going to multiply that $4,700 by 100 shares, and that's going to give you a gross of $4,700. So if the trade goes against you, you're now able to make $4,700 plus your $375, which is going to give you a new total of almost $5,000. Remember, you did pay $5,200 for this, so you're going to have your $5,200 in addition to your gain. Now, the $4,700 is just your gross. In order for you to calculate your net, what you're going to do now is that you're going to multiply your $4,700 by your delta. Remember, I did show you the delta was 0.6398 or 0.63. So you're going to multiply your $4,700 multiply by 63%, which is going to be your delta, and your net return on this trade is going to be 2,961 positive. So this is why I would highly recommend United Health as one of those stocks that could be traded for long-term investing. Now, while you're using it for long-term investing, you can go ahead and make some short-term gains by employing the covered call option strategy. Remember, the first way I would advise anyone to get into this stock for long-term investing is going to be to DCA or dollar cost average into the stock. Pick up as many shares as you possibly can before this actual stock starts to go back up again. So there you have it, investors and future investors. This is a perfect stock in order to use for long-term investing. The first stock was Google because Google has a slight drawback right now, and that first stock has been highlighted in the video before this. The next stock for long-term investing is going to be United Health. Once again, that stock also has a drawback, so now it's a good opportunity to get into it. If you guys want me to continue making these series in order for you to be able to trade stocks that have a pullback, which increases the odds of you winning the trade, then just go down to the comments below and just go ahead and write more. I have no problems going ahead and make these videos for you guys. Now, for those of you guys that made it to the end of the video, you guys are the real investors and future investors. If you haven't already, now would be the perfect time for you to go ahead and like the video, subscribe to the channel. But most importantly, if there's anyone you know out there that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's try to help as many as we can make income from options trading in order for them to supplement their 9 to 5, and eventually they may be able to become a full-time options trader for income. Now, until the next video, keep pushing your investments.